Hello, I'm George Hadjia and welcome to this week's Video Insight, where I'm going to attempt to tease out some of the similarities and differences between investing and gambling. Occasionally, I'll hear people make assertions such as investing is no different from gambling, in the sense that both pursuits involve putting money at risk with the aim of generating a profit, as well as both requiring decisions to be made under uncertain conditions, where there's a range of possible outcomes. Investing and gambling are similar. However, there are some stark differences between the two activities which make investing a superior path to long-term wealth creation. The first is the fact that investing affords the decision maker an advantage if they're willing to apply effort and diligence to their analysis. This is typically not the case with gambling, where the gambler usually starts at disadvantage due to the house edge, whereby the odds are stacked in the casino's favour. Casinos will build a mathematical advantage into each play, whereby no matter how much effort you apply, gambling over repeated attempts will be a losing proposition. Slot machines are a notable example of this, whereby some machines are rigged for players to lose around $25 for every $100 they gamble over enough plays. In contrast, investors are able to judiciously research companies, generate insights that other market participants may have missed, and make investments when the odds are stacked in their favour. A second advantage in investing is the availability of loss mitigation options. If you invest in a stock and the facts underpinning your investment thesis were to change, you can sell the stock and potentially avoid a permanent impairment of your investment capital. Gambling, on the other hand, usually involves binary outcomes. Either you pick the correct outcome and win, or you lose and there is no way to salvage your capital once the bet has been placed. Lastly, time is on the side of the investor, particularly if one invests in high-quality businesses that are able to reinvest their earnings back into the business and earn high returns on capital. These fabled compounder stocks are capable of generating significant wealth over time. Gambling is a time-bound activity, given that a final outcome is determined at the end of each play. Once the game is over, the outcome of either winning or losing money is decided and cannot be reversed. Despite some superficial similarities between investing and gambling, there are material differences that remind us that a sensible investment approach, carried out with discipline, is likely to yield superior results over the long term. Thank you for listening, and don't forget to follow us on Facebook and Twitter.